Greetings, everybody. This is Jeff Scott, and this is my video for the weekend of July 26th, 2020. I am doing this on the road, so the audio and video may not be up to snuff, but I won't get home until late tomorrow night. If I was going to do it, I had to do it tonight. It's my first real trip since COVID. Came out to California to go to a meeting with Roy Kelly. So I called it Special Weakness on Deck. For those that don't know baseball, that means what's coming up next, plus earnings Lollapalooza. Sunday is the 26th. My name is Jeffrey Scott, and this is my email address, hgsidoc@gmail.com. I welcome all comments, criticisms, questions. As always, this is for educational purposes only. Any recommendation in the spirit of education, not investment advice. I am a doctor, not a broker. I am independent. I pay for the tools that I use, and no one pays me to say good things or bad things about anybody. Trading involves risk. You and your owner are solely responsible for any and all investment decisions that you make. When I do live education, I call mine Be Your Own Guru. And my intent is not to teach you to be like me, but to give you the tools and help you figure out what works for yourself. Well, I started by reading O'Neill and learning CanSlim. I met Ian Woodward, who taught me how to make money using CanSlim and improved it. And then in partnership with George Roberts, developed HGSi software. Ron Brown went from being a student to his partner. John Person, just a great trader, has got great indicators, now incorporated as an add-on for HGSi. George Lee, a great trader and buddy who recently passed away. Gil Morales, author, trader, also interesting guy. Sagar with his Q tools. Van Tharp, position size money management. Minervini, who sort of like takes the best of CanSlim and makes a ton of money with it. And then Roy Kelly, whose meeting I was at this weekend. I own a lot of tools, but I use a few of them. I need TradeStation and Thinkorswim, and I've got various indicator packages that are pretty critical to me. From an analytics perspective, I use HGSi, EdgeRater, the Q, and the Dr. K tools. From time to time, I may introduce you to something I'm using. It's important to point out I am never paid by any vendor when you buy something that I suggest or use. Any affiliate fee, which they might pay to somebody who made a referral, is passed to the purchaser as a discount. I don't need your money. Here is the website for HGSi, the software. I am not affiliated, free 30-day trial, and under investing strategies, you'll see hundreds of movies by myself, Ron Brown, and others. Stock patterns are cyclical. I really feel like we're in the circle. I've said that before. Often we think we're falling and we take another leg up. Eventually, we're going to stop going up. When you consider the turmoil this country is in, the political upheaval, the impact on COVID, the potential for shutting down again, does it really make sense that we're at near all-time highs? I don't think so. Obviously, the Fed and other reasons are propping it up. But remember, high-growth stocks may go up like rockets, but they fall like rocks. Based upon where we're at, I became more defensive over the last couple of weeks. That protected me this week. That means bear call spreads. I sell a call at the money and buy something out of the money to protect me. When the stock goes down, I get to keep the premium. I buy puts, so I write a check, but now I benefit from the stock falling. If I have something that I don't want to sell for whatever reason, I might sell calls against it, which gives me a little premium to buffer some of the loss that might come. I could short stock. I've got a couple short positions on right now, and I can buy contra ETFs or options on them. I'm doing every one of that group. Now, I wish I could say I'm net negative and I have no positives, but that's not how I trade. I still have some longs. I probably am a little bit too long right now than I'd like to be, so I'll likely start going closer to neutral and maybe a little bit directionally short this week. But that all depends upon the futures and what the market does on Monday. Although I am definitely bearish, it would not shock me to see a little bull trap, the market to pop on Monday or Tuesday, suck more of us retail traders in, and then bombs away. Keep in mind, August is not a good month typically for the market. Friday sector report, a sea of red, not a lot of strength in that market. It was a tough day all around. Major markets tell the story. Let's take a very quick look. I don't think I need to go into too much detail here. So these are futures. Why futures? Because it gives me the benefit of the pre and post market. S&P futures. High of the year occurred in February 20th. We have not retaken those highs. Those happen to be the all-time highs. Obviously, a really dramatic drop from 3,400 to 2,174. What makes me a little bit concerned is we got a person sell signal come in. We certainly feel a little bit heavy right here. If I want to be bullish, the 17's above the 50, above the 200. They're all sloping up, and a pullback to the 50-day or even the 200-day moving average here would not mean that this recovery is over. And you can see we've had a number of pullbacks already to the 50 and the 200-day moving average. The Nasdaq's been the true champ of this market, but you can see it was riding up at 17. It broke through it on Friday. It's in a sell signal. 50 and the 17 are quite a bit above the 200, so even a drop to the 50 would be a significant drop here. A drop to the 200 would be pretty bad if you're long. Both those are possible. You would have to get back up to that prior high because we got a double top here, and sell double tops is a rule that I learned. The Dow futures, not nearly as strong as the Nasdaq or the S&P, barely got above the 200. The 17 is above the 200. The 50 is not, and it looks like it's falling. Now the good news is if it falls to the 200 and bounces, it doesn't have very far to go. If I look at the Russell 2000, it's similar, except it's already broken down below the 200-day moving average. If we look at the VIX, you can see the VIX popped on the end of the week. Actually, for the whole week, it was up. Be interesting to see if this goes anywhere. Now, if you look at where it's been basing here, significantly higher than it was basing before the prior market drop. And if you're a dollar bull, you got beat because look at how far the dollar fell this week. So that's the daily futures. We'll go back to the PowerPoint so I can go quicker, and we'll look at some of the weekly futures as well. These are all screenshots that I took today prior to me doing this program. So it's all up to date, and you can see how far we've come off the bottoms across the market. There was a small pop on the VIX, and the dollar, although it's very low, it's not really broken down below this past area of congestion. Rates bounce around the generational low here, although further low drop on the short term, the 10-year versus the 30. Obviously, if you're building a house, you want low rates. Question is, are negative rates coming? AD lines diverge. Notice the small stocks on the white have not made a new high, yet on the large stocks have made a new high on their AD line. If you look at the NYSE, it has failed here, and all the major ETFs turned down except for low rates equals TLTs continue to go higher. Breadth pulls back from overbought. Here we are, stocks above the 200, stocks above the 40. These are pretty flat week over week, but if you look at the 12-week or 3-month new high, new low, it came off of overbought and is now in a more neutral posture. The daily McClellan, the weekly McClellan, I look for extreme readings, divergence, and I look for zero-line rejects. Let's just say none of that occurred on either the daily or the weekly. I get the feeling perhaps that we have a little bit of divergence here. It wants to go higher. It's not going higher over here on the summation index. I think you can see it better on other indicators. Current buckets, for those that are new to me, take all the stocks the S&P 1500, put their Bollinger Bands, and tell me first how many stocks are above the midline. 72%. So, this market may have felt weak the last couple of days, but in reality, most of the stocks are above the midline of their Bollinger Bands. There are very few stocks above or below. If you go back just a week ago, you had a few more stocks above, but notice how many stocks were at the top of their Bollinger Bands and how we've had a move towards the center here, and that's the weakness we felt. Typically, this will continue to go lower and lower before it turns around. Hindenburg will not expect a Hindi until we get new highs. Notice that the new highs, frankly, on the NASDAQ and the NYSE have basically dropped below 2%. So not a lot of new lows, but clearly some weakness coming in. Market tone still looks strong. But if we start to look at the sectors, this is using the Q-Edge tool. Let me say a few words about it. In fact, let me go into the tool. I love this tool. If you come to my house, you'll see during the day that one of my monitors is going to have this on it. Why? Because I can look at 1, 2, or 5 day, 1 week, 2 weeks, or a month, and see sector performance. More importantly, over 1, 2, and 5, I can see what's underneath those numbers. Imagine on Monday you're seeing the NASDAQ hitting new highs, and you're seeing more and more red on the industry groups and stocks. It just tells you the breadth wasn't there and that rally was going to fail, which it did. Now I can look at the sectors comparative this way. I could go over here and look at what was working this week, and you could see from a 1 day window communications. But if we look over 5 days, of which 6 out of 5 were positive on the week, energy, financials, discretionary, staples, real estate, healthcare, and interestingly, communication over 5 days were the weakest. I think this is a great tool. If I rather look at percentages and I look at over 5 days, you can see that the biggest percentage up on 5 days was 6% on energy, and real estate was down 1.75. The majority of things were yellow, which meant fairly flat. So I'm using that tool all day long, and if I have time, I'll show you how I stock pick with it as well. But I really refer you to Sager's YouTube videos. They're awesome, awesome. Canaries in the coal mine, list of some of the big cap tech. Yes, I know Priceline is now called bookings. It's in the chart. I just never changed this. Notice how the drop that we had hit all-time highs, and we sold off. Now, will this be an island reversal and we go higher on Monday with a gap up? That would be music to the bulls. Or is this the first step in a multi-day drop? I think there's risk here. We have a pocket pivot to the downside, kahuna to the downside. We'll see where we go. Major week for news and earnings. You've got Fed meeting, Powell speaking, you got employment numbers, you got a bunch of other cool things. So high risk on news, and boy, earnings. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So for me, I own Shopify, at least I own it right now, Facebook, I own Amazonian, I own Apple, not Alphabet right now. So I've got some big earnings coming this week. I was looking at buying Dexcom. I own Centene. So I'm going to look at each one of those positions and decide whether or not I have enough cushion to hold it. There is nothing wrong with taking profits going into earnings and then buying them after the volatility crush after earnings and buying them back cheaper, even if they don't change much. So we'll see, but I will be very active this week in managing my positions, especially my Amazon. So market started with mid-cap rally, then it went down the rest of the week. Sectors were mixed, setting up for a big week. Markets feel heavy here. We are heading into August, historically weak month. We have a Fed meeting. We have COVID and its economic and health impacts, growing cry for shutting the economy. I was mostly flat on the week ending with small gain, but did not recapture what I lost the previous week. So I'm off my highs, but still up about 100% on the year on a 7-figure portfolio. I've added to my contra, sold some tech, but will likely get more short posture on Monday. So now let's go take a look at some other stuff. Close this down. So I usually like to jump over into TradeStation and go into this view here and take a look at some of the major index futures. And just very quickly, showing you on TradeStation, we have a new sell on the E-minis. Our high jump is not an issue. We've come off the top. The MACD divergence on the E-minis. A lot of things that say this market could go lower. The Dow futures, a new sell signal as well. The NASDAQ futures, sell signal on Thursday. All of the high jumps are coming down. And the Russell futures, also a sell signal. So we got pretty uniform sell signals that came in, except if you want to look at the VIX, which still has a sell signal, but notice it's got green dots here. So it's got some bullish convergence. So I'll be looking for a buy signal on the VIX this week if the market shows any more weakness. I'll come back to TradeStation later. In HGSi, what I like to do, let's just open it up. I like to start with my Major Markets Plus in the Market Analysis group. Hit that, open this up, 27 things, go to the top-down view. And we could see, no shocker, surprise, with the weak dollar, the metals and with high yield, treasuries were the leaders. The losers, boy, biotech. Last week I made some comments about Moderna that were bearish. It sold off some this week as well. $32 billion market cap was a joke for a company that's never had a drug hit the market, and where the governments of this world are going to make the argument that the drug should be given away for free or with minimal profitability. I don't know where their pricing power is going to come from. They would disagree with me, by the way. Now, for the purpose of argument, I want to show you something. I want to add an RSI and a MACD to this chart. And I want to put them here on the bottom because I want to look for any evidence of divergences. So I'm going to choose Create View. I'm going to pick whatever view I want to adjust, and I'm going to go Duplicate. I'm going to edit it. I'm going to change the name for Divergence. All right, go back to the window. I'm going to add one new window for RSI. And I'm going to add a second new window. Well, let me put a Wilder RSI in there. I want another new window, and I want to call that MACD. Hit OK, add indicator. Just type search in the MACD, MACD. Got it. Hit OK. Now I want to move the MACD down the bottom. And then I want to move the RSI down the bottom. Now my chart's going to be messed up, so I'm going to have to do some adjustment. So I'm going to make this a little smaller. Bring this up. Bring this up. Bring this up. And here is my MACD. And here's my RSI. And I want them to be bigger for this discussion, so let me do a little bit more cleanup on them. All right, so S&P 500. You look at it here, it's come a long way, that's for sure. It really hasn't broken down yet. It's had a couple of weak days, a doji on top of the 17. You certainly could argue, Jeff, it could still go higher from here. I don't disagree. One thing I do notice, and the reason why I wanted to put those things on, we see a lot of this stuff going on. A market that's been going up, and then we have here a MAC. Whoa, that's not what I wanted. MACD that's divergent, as well as an RSI that's divergent. So a little bit of concern on the S&P 500. If I look at the Dow Jones Industrial, I know it's in here somewhere. It's always hardest to see when it's in front of your face. A similar picture. Has it really done anything bad? No, it's still above its moving averages, couple of skinny days there. But the same basic picture. We've got clearly divergent MACD and RSI on something that had been going up. So that's bothersome. I look at the NASDAQ. Have we broken down? Well, we broke down pretty much. Hard not to say there's a trend line in this area. It kind of looked like we broke down that trend line, but time will tell. Now we're either going to, in my opinion, we could gap up on Monday if there's some positive news and do one of those and say we're back off to the races. And that would be a empty green. Or we do this and touch the 200. I think this would be very difficult on many of our portfolios. I don't know which way it's going to go. I think it's caution is warranted. We look at the Russell 2000, clearly not the strongest of them. It's just like kind of dying here with lots of dojis trying to decisively break and stay above the 200-day moving average. I think there's risk there as well. So I think the moral of the story is there's risk in this market, not that you didn't already know that. If you take a look at the dollar, you'll see some positive convergence. Yeah, never mind. You do have falling dollar and you have improvement in the MACD histogram. It looked better on my other charts, so I'm not going to make much about that. Dollar's been extremely weak, as you can see here. The VIX bounced at the end of the week, although it didn't do much on Friday as the market tried to stage recovery at the end. Gold has been super strong with that weak market. You can see a big gap up. I think it's close to $1,900 an ounce. Silver, it's here, looks just like gold, gapped up here. And then something that's finally participating is gold miners. For a long time, gold miners were not participating. So this is an interesting market. Biotech got hammered at the end of the week, but it just pulled down to the 50. What has it done before when it pulled to the 50? It bounced. So that may be okay. Semiconductors with Intel's warning gapped down, but actually worked its way back up a little bit over the day. And then if you're an IBD 50 investor, we like to look at the Innovator IBD 50 fund, and you could see it too has paused there. But it's a doji, and we'll see where it goes from there. Indecision on the close. If we go to 07, look at industry groups, we have 175 groups. If I look at the 2-day down, 2-day up, I have only 13. And if I look at the 2-day down, now I'm tired and I don't want to go too detailed tonight, but when I see 38 versus 13 or whatever it was, that's bearish. And when I see semiconductors, airlines, electrical, exploration, especially apparel, computer, healthcare services, communications, these are typical growth stocks. So I know that growth stocks and IBD 50 stocks are probably coming off at least one bad day. Now, typically I like to go in the 2-day up and take a look at the top 10 groups. Let's look at the first couple. Precious metal, Yamani Gold is a small stock that comes to the top. It looks like it's getting ready to break out. We'll change this to a stock view. There we go. Kahuna and a mobile breakout. Looks like getting ready to break out. I like that. High close doji doesn't count because it's in an uptrend on the weekly. Wheat and silver, this has been strong. You would have wanted to buy it ultimately down here off the 50. Probably not too late. It looks like it's moving. Newmont, another nice looking gold stock. There's a bunch of them. The two that I own are Goldfields, which I put around 8. And you can see why I bought it. I bought it down in here when it had mobile breakout from a squeeze, 2 kahunas in a row. That was a good time to buy. Obviously, it's had a very nice run. And the other one I've owned for a few weeks now is American Barracks, GOLD, used to be ABX. It's had a nice run, didn't do much the last couple of days. So you could always find something that glitters if you need to buy. Healthcare supply, only one stock is above the index, and that's Owings Minor. And I don't know what happened with this. We could go to more info from the web, hit FinViz. I'll open up a browser window pointing me at Owings Minor. And what does it tell me here? Hit a sale of some division. Hedge funds are crazy about them. Well, tops earnings and revenue, that's a good reason. So Owings Minor and Baxter and a number of other companies, they're either at distribution or creating those hospital supplies that everybody's going to need once they start to wake up after COVID quiets down or if COVID gets worse. So I would see their volume increasing. So that's an interesting stock, although it's had a big jump. Restaurants, I mean, this is the pattern. These are stocks that are beaten down industry, that there must have been some good news and people think they're going back out to eat. But is that going to continue, or are we going to have repeat closures or no longer eating inside? I don't know, but someone's betting that they're going higher at Kahuna, mobile breakup from a squeeze. above the chandelier with a run maybe up to the 200-day moving average. Darden, similar pattern. McDonald's has already broken above their 200. I look at the earnings per share growth and it's very little. So you have a bunch of restaurants here. Texas Roadhouse, I mean, I hate their food, but look at this. You're sitting right on the 200. You had a mobile breakout, a kahuna. You've got a pocket, you have a person buy, convergence on the market catcher, a mobile breakout from a squeeze. If this was a tech stock, I'd be all over it. I just don't know if I want to be buying restaurant stocks in this environment. Look at airlines. They ran up, they came back. So I'm not sure. So restaurants made it. I think that they're up here because they're defensive. Beverages are also defensive. Apparently people are drinking a lot of Sam Adams. Hard for me to buy this. If you own it, congratulations. I'm not sure I'd be selling it. Hard to buy it here. And you could have bought it down here. Anywhere in this area. 3 kahunas in a row. That should have told you something. I didn't see it. Coca-Cola, Molson's, nah. Constellation. Yeah, I would think these guys would be doing well. They own a lot of wines. They used to call it Candy something wine company. I know my wife and I do a bottle a night as part of our social distancing campaign. We stay at home and drink. Fortunately, we like each other, so we've been having a blast doing it. Home product stores, another defensive play. I like At Home Group. I don't know what they are or who they are, but I like stocks that break above the 200 base and now they're going again. So At Home, it's not about their fundamentals. They have crappy looking earnings and they had a big revenue hit, but I like this pattern and it's something I might pay attention to. Home Depot's been doing extremely well. Is this a place to buy it? I'd rather buy it cheaper. Bed Bath & Beyond is cheaper, but I'm not sure I'd rather buy it. Lowe's company, like Home Depot, has been in a nice up move. Tractor Supply, my favorite chart of the bunch, not necessarily to buy, but as an example of what a tight move is. This is one that's probably worthwhile studying and figuring out where you might want to have bought this stock and what signals were you getting. I mean, one of the things that stands out to me right away is notice how price has moved down and person market catcher was moving up at the same time as you have a new person buy signal. That's would have been a great time to buy it. Obviously, I didn't buy it there either, but I'm looking at it in hindsight. Wow, but what a beautiful pattern. And this looks like a bad day. It was actually up on that day. Amazing. And then Lumber Liquidators is broken out, but it's gone too far for my taste. I do own some of the next one. Restoration Hardware, got another month or so, month and a half before it gets earnings. And I'm tired, so I'm not going to go through the rest of these, but I usually look at the top 10. Another way of doing a top-down analysis, let me go back to Edge. I mean, so here's the downside. I love this tool. You can tell that. The downside is it needs a data source. And right now that data source is Thomson Reuters Refinitiv. And if you want to do this real time during the day, it's about, I don't know if I pay $1,500 a year, but it's a lot for data. So most people aren't going to use it because of that. If you live outside the US, you probably already have Refinitiv because they have lots of international markets like the Indian market, et cetera. So when I look at a one-day return on the market here, I saw that communication services are they turning around 2, 3, 3, 8, 11. I see that energy's been strong now for 2 weeks. Materials looks good. But I'm negative on this market, aren't I? So maybe I might want to go short. And maybe I'm seeing 2 weeks ago and a month ago, industrials were really strong and now they're getting weak. So let's take a look at potentially finding some shorts in industrials. So I've highlighted industrials. Now I'm going to hit the gears. Dun, 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 dun. Now it's going to list for me. Please. the different groups that are part of industrials, and then let's look at a 2-day pace and the weakest ones. So over the last 2 days, we have construction and machinery that was super high, it's come down. Building products has come down. Human resource and employment has come down. Trading companies. So let's say I'm interested in this group here. These 1, 2, 3, 4, 5. The 5 weakest on momentum. So I'm going to hit the peer. And it's going to give me all the stocks that are in the S&P 1500, I believe, of these industry groups. And then he's got this magic button here of the 3 red stars. I'm going to click it, and it gave me 2 stocks that are potential to short. So let's take a look at these 2 very quickly. These are from a fundamental perspective, not from a technical. We haven't looked at the technical. Let's go look at these 2. Let's go into TradeStation and Screener, go to etc., dump them in here. Legion. So, well, I found a stock that potentially I could short. It's got a wedge here, all right? So it's protected on the weekly, but if it breaks through this trend line, I'd love to short this stock. I've got an OBV that's broken down below the moving average. I've got a person volume on the weekly that's turned down. On the daily, I've got a sell signal. Again, I'd like to see it break through this area before I went big on the short. A new sell signal on the Lagar RSI, a cycle peak, A, B, C wave on Roy stuff. This is a breakout indicator from John Carter. I see a lot to like in this short. ALLE, let's look at Boeing. One of the most news-driven of them all. I think I like the other better. So I like ALLE. So what I want to do now is I want to go into the Vital tool. So the Vital tool, and I'm going to type in, let me go back, hold on a second. Because I don't know all the symbols, ALLE.N. Of course, you have to have the right symbols for TradeStation, or for Reuters. And I screwed that up. Now I'm going to hit the arrow, retrieving, listening. All right, so Allegion, building products. So do communication and networking, $101. Volume is not great, 237,000 shares. I'd rather have more volume. Makes $4.71. Next earnings are not to October, that's good. 1 day change minus 1.5%, 2 day minus 10%. If I look at the industry group, okay, the stock's in the industry plus, so it's a little bit bigger than the industry group. 1366.27. The last couple days, this group has been weak. If we look at the performance on Friday, you can see overwhelmingly negative from a internal perspective. The magenta means it's overvalued and not much risk of a short squeeze. So that might be a good stock to short. Now, I'm going to take a look at the peer analysis, and this is going to take a look at a much larger group of stocks that are like ALLE. Not all these are in the NASDAQ, the SP 1500. Let's just go look at what comes up to the top here. So I might take these stocks here and go look at them. But these are the choices that came out of the program. And the one thing I might be concerned about is that it does have 3-year and 2-year positive growth. I've got other stocks here that have negative growth the whole time. So I might go drop these into this and take a look at them, but I may have found something to short. So here is top-down investing, really using fundamentals. Bottoms-up investing using fundamentals. What else? I did put together a buy watch list. Let me pull that up and show it to you. And remember, neighbor, it's a list of stocks that I put together to watch and not a list I put together to buy because I don't know what the market's going to do. So let me just point out some of these things and why I like them. Now, one thing I do like to get is something that will have their industry group in it as well. So let me go here. So you can see, started with a bunch of application software stocks. Here's the basic picture. Well, Calyx popped last week, one of my best picks in a while. Hope you bought that. But Datadog and GAN have the same channel. They big uptrends pull back to the 50 and bounced. This could be a great place. So I put these in my pullback waiting for a signal. So I'm looking for them to have a kahuna or something that says they're going higher because they could certainly break down. But when I see a stock that breaks down to support and stops and had been a big leader, I get interested. So I got a couple stocks, and then the Calyx was just a monster. I gave it to you on this week. Here was Friday, and I gave it to you because of the kahunas and the mobile breakouts and the squeeze. Didn't realize earnings were right around the corner. They had great earnings. The stock has had a big move. Imagine the move you would have had if you had options. Now, I don't love the banks, but interestingly, let's just go into TradeStation and let's look at KRE, the ETF of the regional banks. And they all look like this. You got a high close doji, off of support, daily off of support, a new buy signal. The part I didn't like about it was the Roy Kelly cycle. But I think regional banks look interesting here, and if we're going to rotate out of technology, we may end up rotating into regional banks. Sienna is a beautiful chart. Sideways move, we had a kahuna pocket pivot and a person buy, mobile breakout from the squeeze, right off of the 50, one of my favorite patterns. We've got two e-commerce stocks that have pulled back. Here is JD.com, the same as some of those others. It's pulled back to support. Will it bounce and become a buy, or is it going further? I don't know. I don't have a crystal ball. And then here's Jumia Technologies, which has broken out. Obviously, when the 200 days up here, it's fallen quite a bit over time. Anything else I wanted to show you? I like these two REITs. These are different than a lot of other REITs. They are data centers. Their customers include small cash poor companies like Apple, Microsoft, Amazon, eBay, They're not going anywhere. Great earnings per share growth, pays a dividend, sideways consolidation, looks like it's breaking out, a couple of kahunas. I'm interested in Cyrus One. The other one is Digital Realty. Last week we looked at Equinox, similar group, but I think it was an $800 stock. AMD, probably too late. It went up because of the failures at Intel. In fact, the way this market is, I sold some $70 calls against me because I got a bunch of premium and I just don't trust it. This is not the market, but we'll see. I can always buy the calls back if I'm wrong. And then the other Infi, sideways move, sitting right down here. I want to buy it here. I'm waiting to see it move. So how do I watch all these stocks every day? Well, I do a couple of different things. One, I put them into my market watch, where I have a number of my indicators already built in, so I can be watching these stocks during the day. And I got some of my favorite indicators in this here, and I look for them to fire, and I look for multiple things firing at the same time. I've got this cool indicator from Dr. K that tells me seasonality, and that seasonality in the next 30 days for Dexicom is up 13.59%. That's worth looking at. So I watch that. So that's really cool, is you can detach that, and then I could put this on another monitor, and I do that all the time. So I do that in Thinkorswim, and in TradeStation, it's called Radar Screen, and I have the cues, I got my stuff, Morales and Capture stuff, JP stuff, and so I can, during the day, look and see who's got signals popping up, red or green, bullish or bearish. I also have been playing around this from Roy Kelly, and it's a trading system where the signals are all done in Radar Screen, and you could see these signals came in as shorts on Friday. Here's some bunch that came in as buys that were on my buy watch list. It tells you the price that they were recommended at, how much it's moved since the date of recommendation, and percentage. And this thing does remarkably well if you look at it a few weeks down the road as far as return. So I really rely a lot on this now for looking at new buying and selling signals. These were some of my shorting candidates, and it's always nice to see that the ones that I thought might be potential shorts, the program flagged as well. So this is just another Radar Screen. So these are the things that I use in my trading. Other than that, have a great week. I'll probably do this next week. If you've got to buy something, I'd be looking at things that glitter. Careful with earnings, and let's see what the Fed head, Mr. Powell, has to say. Good night, everybody, and thank you.